Hey guys, welcome to week 34 of my TFSA portfolio. And in today's video, we're going to be discussing, as usual, my portfolio. On top of that, we're also going to be discussing Air Canada because some crazy stuff has happened. The stock has risen quite a bit, about 20% in the past week or so. So first off, starting off with the transactions that I made this past week, and then we'll get right into Air Canada. So I only bought 4 different stocks this past week. I bought Algonquin Power at $17.83, and my cost basis is around $19. I bought 5 shares of Borrowell Technologies for $6.79 a piece. And as I told you guys before, under $7 for Borrowell Technologies is the price point that I'm looking at to continue adding more WELL to this portfolio. And still, WELL Health is a relatively small position in this portfolio. However, my other public portfolio on Wealthsimple Trade, it's a lot bigger. It's actually my number 1 position in that portfolio. Then we've got Enghouse Systems, which I bought 1 share at $52.91. And again, the reason why I bought Enghouse is because it's below my cost basis currently at this price, and they do pay a dividend. Enghouse is a technology stock in Canada, and at the peaks during the pandemic, they hit, I think, about $80 or $90 per share. And they had a trimming very recently, so I still think this is a solidly run company. And right now they're on a large dip. And I think that's because they had a video platform that was heavily used during the pandemic. However, now that we're kind of recovering out of that, people are looking more for recovery stocks. And Enghouse had a lot of revenue increase due to that video system platform. Last stock I bought here was RioCan, and this is just a solid REIT all around. I think that RioCan right now, it's still below its price before the pandemic happened. However, with the reopening happening up, I think in the next maybe 2 to 3 years, this stock should eventually recover, as they have very high quality real estate all over Canada. And I believe over 90% of the customers, if not 95% of the customers, were able to pay rent. Now, jumping over to my total portfolio, you can see that I've organized this by the market value. So the highest market value stocks at the top and the lowest market value stocks at the bottom. Currently, my cash position actually sits higher than my GDMP position. Right now, GDMP is only worth $160, and I'm down 22.8% on this position. And that's just the name of the game when you play with speculative positions. But you know me, guys, I won't be hiding these losses or these paper losses from you guys. I'll show you very transparently every single week what's happening in this portfolio. For the most part, we're seeing a lot of green across the board, except for a few red stocks here and there. But the most notable stocks here are Kinaxis up at 41% gain, and we've also got the Bitcoin ETF as the number 1 position in this portfolio for gains, up 57.51%. Now, if we look at Air Canada here, this stock performed very well. If we go over to the stock chart here, let's just type that in. So Air Canada stock over the past month or so, on October 29th, it was down in the ditches at $22.19, and it recovered by 16% within a week or 2. So we're going to discuss what happened here and why there's an increase in the price so suddenly, especially for an airline stock. The first thing that we should look at is the earnings report, and this article here kind of dissects it. I'm going to highlight a few points here that I think that are very important to look at. So Michael Russo, the CEO, said, "There's no textbook on this type of recovery, or any in the history. There's no doubt we're very encouraged by what we see, and there's no doubt that the length of the recovery has moved in from the consensus of 2025 to at least 2024 and maybe 2023. This is very positive news for Air Canada, because I guess their consensus either internally or just around the world, people are expecting the world to get back to normal by 2025. However, that timeline has shifted up to 2024 and maybe even 2023. So this is very good news because investors were baking in a 2025 full recovery. But now that this is out, I think this is very positive news for Air Canada going forwards, meaning that it'll take them less time to get back to profitability. On top of that, they're planning to increase their 4th quarter capacity, so I guess over the Christmas holidays, by about 135% compared with the same quarter in 2020. So it's a huge improvement over 2020. But before this pandemic, Air Canada was a fairly well-run company. So this article here, another writer says, if Air Canada recovers to even 70% of capacity of 2019, it could become profitable. And Air Canada was a very profitable airline, at least In the airline world, they were very profitable compared to their peers before the pandemic happened. And that's why if you look at the stock chart in the past 5 years, Air Canada had a pretty nice run up from 2017 at about $13 per share all the way up to 2020. They were sitting at $50 per share. So any sort of good news around Air Canada will have investors betting that Air Canada will eventually recover, and the sooner the better. There are 3 other reasons based on the latest earnings that Air Canada's management gave to investors so that they could rejoice. Firstly, Air Canada has not yet touched the $4.4 billion unsecured loan from the bailout program. So Air Canada, if they do get in trouble, they have access to $4.4 billion of capital. But it seems like they've been able to manage their cash as to not need to take from this line of credit. Secondly, the airline has raised $7.1 billion in secure credit facilities, bringing additional liquidity, reducing borrowing costs, and extending debt maturities. So this is just pushing out their debt further and further in the future so that they don't have to worry about it in the short term when they're still facing like lockdowns or a lot less business travel. The last thing, which is actually pretty crazy, the airline not only stopped cash burn, but they also reported a positive net cash flow of $153 million. So this is not net income, but this is positive net cash flow. So basically, how much money did their bank increase or decrease by in the quarter? And a positive net cash flow means that they increased their bank account by $153 million. So I guess what am I doing with my Air Canada position going forwards? Well, right now my cost basis is about $25.29, which is around the current price that the shares are trading at. So I think that I'm comfortable holding these 28 shares that I have. However, if we do see more of a dip, and I do think that we could see a dip in the short term just because there's a lot of hype around the stock recently, that's when I'll be scooping up a few more shares of Air Canada, especially if it drops to around 22 or 20. I think that's a decent price point to continue to average into this company as this portfolio grows. I also do plan to add another stock to this portfolio, and you should see it show up next week. If you guys have any ideas of what that stock is, let me know in the comments down below. I'll be throwing up 2 videos on the screen here. If you're there, I'll see you there. If not, keep up the grind and have a great day.